Hello and welcome. Pro Tax Accountant has put together this discussion because, well, there's a tax change that's catching millions of UK investors completely by surprise. If you earn any income at all from dividends, this is definitely for you. So let's get right into it. You know that great feeling when you see a dividend payment land in your account? It's fantastic, right? But here's the big question. Is all of that money actually yours to keep, or does the tax man have a claim on it? Let's find out. Okay, if there's one number you take away from this, it's this one, £500. That is your entire tax-free dividend allowance for the year. Earn up to that, you pay absolutely nothing. But the second you go just £1 over, the rules change completely. Now, you might be thinking, oh, this is just for the big-time investors, right? Well, that's just not the case anymore. An estimated 3.7 million people here in the UK are now expected to be paying dividend tax. This has quietly become a real issue for millions of ordinary folks, with even pretty modest investments. All right, so let's dig into the problem here. For so many people, the moment they realize they owe tax comes as a complete and utter shock, often discovered while they're just casually checking their accounts over their morning tea. Just imagine this for a second. You're having your morning cuppa, you have a quick glance at your investment app, and you see 1,500 quid in dividends pop up. Brilliant! But, and there's always a but, here's the catch. The first £500 is covered by your allowance, but the other £1,000, that is now potentially taxable, and that's the nasty surprise that's catching so many people out. Okay, so let's break it down. How do the numbers actually work? Because once you get this rule, you can start to manage it. So the dividend allowance is simply the amount you can earn from dividends before any tax is due. For 2025/26, that's just £500. And this is a really key detail. This is on top of your standard personal allowance of £12,570. They stack together. So once you go over that 500 quid, any dividends you get are then taxed based on your income tax band. If you're a basic rate taxpayer, you're looking at 8.75%. It then jumps up to a hefty 33.75% for higher rate taxpayers and all the way up to 39.35% for additional rate earners. And this timeline, wow, it really tells the whole story, doesn't it? It shows exactly why so many more people are getting caught in this tax net. I mean, just a few years back, the allowance was a pretty generous £5,000. It has been systematically slashed, all the way down to just £500 today. It's a kind of stealth change that has pulled millions more people into paying tax. Okay, theory is all well and good, but let's see how this actually plays out in the real world. Nothing makes it clearer than a real-life example. So, let's meet Sarah. She's retired, lives up in Manchester, and her main income comes from her investments, about £15,000 a year in dividends. The question is, how much tax does she actually have to pay? All right, let's crunch the numbers for Sarah. She's got that total dividend income of £15,000. First, her personal allowance of £12,570 covers the first big chunk of that. Then, that little £500 dividend allowance takes care of the next bit. So what's left? That leaves her with a taxable amount of £1,930. And here's the final piece of the puzzle. We take that taxable amount, that £1,930. Since it's in the basic income band, it's taxed at 8.75%. A quick bit of math, and Sarah's final tax bill comes to £169. Now, it's not a huge amount, but it's definitely not zero, is it? But here's the good news. You don't just have to sit there and take the tax hit. There are some really smart and completely legal ways to manage what you owe. So let's look at 3 really powerful strategies. First up, the stocks and shares ISA. Use it and any dividends inside are totally tax-free. Simple as that. Second, a personal pension or a SIP. That shelters your dividends from tax. And third, and this is a clever one, you can transfer shares to your spouse or partner. That way you can use both of your £500 allowances. And I want to be crystal clear about this. We're talking about smart, legal tax planning. You know, using the government-approved schemes that are there for a reason. This is a million miles away from illegal tax evasion, which is about deliberately hiding your income. 2 totally different things. Okay, so how do you figure out where you stand with all this? Let's run through a quick checklist you can use right now to get a handle on your own situation. It's a pretty straightforward 5-step check. First, add up all your income, salary, dividends, interest, the whole lot. Second, take away your personal allowance. Third, take away that £500 dividend allowance. Fourth,
Figure out which tax band the rest of your income falls into. And finally, step 5, compare what you've calculated with your statement from HMRC. If the numbers don't match up, it's time to ask why.
Now, doing a self-check like that is a fantastic starting point. But sometimes things are just more complicated. And that's exactly when getting some professional advice is worth its weight in gold. I love this quote. It just hits the nail on the head. Trying to handle complex tax yourself can be a bit like DIY plumbing. You might think you fixed it, but if you get it wrong, well, the leaks can be incredibly costly. A small mistake can easily snowball into a much bigger bill, or even penalties. So, really, the bottom line is this. If you've got a few different income streams, maybe you run your own business, or you just want that peace of mind, getting expert help is a no-brainer. With millions of people now paying this tax, the big question isn't just if you're affected, but how much you could be saving. For advice that's tailored exactly to you and your situation, you can get in touch with the experts at Pro Tax Accountant. Thanks so much for joining me.